Good afternoon, ladies and gentlemen. Welcome to the 15th of September weekly market review. I'm looking very happy today. So is Gerald, as well as our back end staff, Nicholas, as well. Shout out to him. How are you, Gerald?
Very well. Like you mentioned, the markets have done well over the past few months. We're now back to an all-time high for the US market as well as the Singapore market.
Yes, we are at a higher high from the last week that we met on weekly market review. STI for my last check is on a four consecutive winning week. The S&P and the Nasdaq on second consecutive winning week. The Dow the first winning week in three, with all the US indices up more than 1% last week. Okay, so these are a lot of exciting developments with the FOMC meeting coming this week. I also saw earlier on Gerald's slides a lot of interesting information that he's going to share. So I'll let Gerald take over and share with you some of the things that he's looking at right now.
Sure. Thanks so much, Sunny. Okay, today's sharing is for informational purposes only and should not be taken to be financial advice. If you find the weekly market review helpful, do leave us a review on Google. And if you'd like to join SIAS as a member, you can scan this QR code or go to the website sias.org.sg/membership. As a SIAS member, you can access various online resources as well as investor education programs. So, like Sunny mentioned earlier, all the US indices gained by at least 1% in the past week. We have the Nasdaq leading the gains, led by AI-related stocks after Oracle raised their guidance. And for the S&P 500, we saw 1.6% gain to now 6,584 points. STI also reached a new all-time high, now at 4,344 points, with close to a 1% gain in the past week. So what many investors were looking out for, including ourselves, was the US inflation data. We saw the US core CPI coming in at a 3.1% gain compared to the previous year. And this is in line with expectations, even though we see some acceleration compared to the months of March to May. So with the inflation numbers coming in as expected, I think investors continue to be confident about the rate cut coming through potentially this week. So this is the latest expectations of the interest rate cuts. I just updated this last night, and the expectation is still that we'll almost certainly see an interest rate cut in the FOMC meeting this week. Close to 90% expect that we'll see 25 basis points rate cut, and close to 7% expect that we'll see a 50% rate cut. So with that, we have seen the US bond yields coming down. This is the 10-year government bond yield, now below 4.1%. And this is the Singapore 10-year government bond yield, now at about 1.77%. At the same time, we have seen the STI hitting new highs. I mentioned earlier 4,344 points, having staged a strong rebound from April, with continued enthusiasm across both the large caps as well as the mid cap stocks. So in terms of the top performers, we have got a number of property names in here. UL up by 6% after announcing a divestment last week. We saw two of the REITs in the top five performers, including CICT and CapitaLand Ascendas REIT. Both names I talked about in one of our previous weekly market review. So they are actually having more improved investor sentiment with the expectation of the rate cut as well as the lower bond yields. Okay, in terms of the worst performers, we've got UOB down by 1.5%, with the concern that the bank net interest margin might remain under pressure with the expectations of the rate cuts. Okay, so I mentioned earlier that there has also been increased interest in some of the Singapore mid-cap names. This comes at the back of the Singapore Equity Market Review Group's recommendations, including the 5 billion equity market development program to strengthen the local fund management ecosystem, as well as various measures to boost liquidity, particularly in the Singapore mid-cap companies. Okay, so I mentioned earlier that the STI at a all-time high. Likewise, this is what we see for the FTSE ST Mid Cap Index, also having very strong performance after the improved sentiment towards the Singapore market, as well as increased focus towards the mid cap stocks. So today I will talk about two stocks that have gained a lot of investor interest, including iFast as well as PropNex. Okay, so some of the statistics that reflect increased investor interest in the mid-cap state base is that we have seen higher trading activity as well as net insti inflows. Over 80% of nearly 120 non-index names have recorded increased trading turnover, and they have also interacted over 100 million in net insti inflows since May. So, for some of these names that have gained particular institutional interest will be UOB Kay Hian with a 23.1 million net insti inflow and having its PE increased from 7 times to 10 times, as well as CSE Global with insti inflows of 16 million and PE increasing from 11 times to 16 times. Okay, so this is the full list. We see a mix of different companies in here across the oil and gas space, industrial space, healthcare space. So the insti inflows has actually been going into quite a number of different stocks across different sectors. Okay, so one of the names that have gotten more investor interest is iFast. So for some of you who invest regularly, you might be familiar with platforms such as FSM1, Bond Supermart. So they would be brand names as well as platforms under iFast. Okay, so iFast is perceived to benefit from structural shift towards digital wealth management as well as increasing adoption of fintech solutions by both retail as well as institutional clients. In the first half of 2025, we saw iFast reporting both higher revenue as well as net profit. Okay, so this is iFast share price. We saw the dip in April to about $6 per share. Following the very strong first half results, it went up to close to $10 per share. There was a sell down by one of its key shareholders that brought its share price down to $8, and the share price has since recovered to about $8.80. Okay, so in terms of the iFast fintech ecosystem, I mentioned earlier familiar platforms such as Fund Supermart, FSM1, Bond Supermart. So effectively, what we see here would be that the total number of customer accounts more than 1 million, more than 800 B2B partners, and more than 14,000 wealth advisors across 5 markets. Okay, so in terms of the breakdown, Singapore remains its key market, and most of the asset under advice would be in the unit trust segment. Okay, so the group AUA increased 21.6% year on year to 27.2 billion as at 30th of June 2025. And this is driven by continued net inflows, which amounted to about 2.2 billion in the first half of 2025. Okay, so overall, we've seen iFast posting consistent profit growth over the last few years. Effectively, its profit after tax has increased from about 5 million in 2022 to 66 million in 2024. And in the first half of 2025 alone, we see the profit after tax increasing to 41 million. Okay, next I'll talk about PropNex. Many of you might be familiar with this name as the largest property agency in Singapore, with a network of over 13,000 property agents. It has a dominant market share in the property agent share in Singapore, as well as in the transaction volumes. And investors typically see PropNex as a beneficiary from the recovery in new home sales in Singapore, where we have seen a pickup in transaction volumes in the first quarter of 2025, as well as the fourth quarter of 2024. Okay, so this is PropNex share price also seeing very significant gains since the middle of this year. In fact, more than doubling since June this year. Okay, so in terms of the breakdown of PropNex revenue, we see that it has got exposure towards the project marketing, which is the new home sales, private resale, as well as HDB resale market. Okay, it is the largest property agency in Singapore based on the number of salesperson, where we see that it's got more than 13,000 salesperson, which is above the next closest competitor. Okay, and if I were to look at the market transactions, they also account for close to 2 out of 3 of the home transactions being closed by a salesperson from PropNex. Okay, so I mentioned earlier that they are seen to be benefiting from the higher transaction volumes in Singapore. We see here an increase in the new home sales from the fourth quarter of 2024 with the expectations of lower interest rates. Okay, so we see an improvement in PropNex profit. Effectively, in the first half of 2025, the revenue grew by 73% year on year. The profit after tax also more than doubled to 42 million from 19 million in the first half of 2024. Okay, PropNex has also been paying out consistent dividends. We saw that the total dividend payout increased to 7.75 cents in 2024. And in the first half of 2025 alone, with the increase in profit, they increased the interim dividend to 5 cents per share. Okay, so that is the sharing on 2 Singapore mid-cap companies that have seen greater investor interest. For this week, really the focus is on the US Federal Reserve meeting across 17 to 18 September, and we'll hear of the Fed decision on the 18th of September. So with that, I'll hand over to Sunny, who will share the technical analysis.
Okay, thanks, Gerald, for that sharing on PropNex and iFast. Definitely 2 exciting companies to look out for on the Singapore market, given that interest rate is coming down. And on that note, the FOMC meeting is in the middle of this week. So that will definitely be something that the market will be watching out for very closely. So like I said earlier, the STI Index is on a 4th consecutive winning week. We have sort of very strongly breached above the 4,300 level. So the STI Index is now at 4,347 points on this Monday morning. We touched a new all-time high last Friday, and that is around the level of, let me see, 4,375 points. Okay. So at this all-time high level, I think we need to be extra careful when trading into some of the major STI components, especially the banks or even the index itself. Okay, so 4,375, this is where the high of the STI index is right now. If you look at the chart now, we are trending on the upper bound of the Bollinger Band. And if I look at the indicator-wise, I can see that although we still have a positive reading on the MACD indicator, that seems to be weakening down, at least in the past 2 trading sessions. So I think it's always good to be prudent when index is at all-time high. The RSI is at the 68-point level. It breached the 70-point mark last Thursday, Friday, and we are down below the 70-point level. It is now trending very close to the 14 days RSI moving average of 65. Okay, so even though we still have a slight positive momentum on both the MACD and the RSI, I do not expect to see a very big jump above. Let's say we retest the 4,375 or 4,400 points level. I expect to see some retracement or technical sell down coming in, and with the first level of support at the 20 days moving average at 4282, with the 50 days moving average at 4227. Lower bound of the Bollinger Band is just a touch below the 4,200 points level. So these are the key support levels that you are going to watch. If it's pulled down below the 20 days moving average, just like what we saw in August or in early part of August as well, that's definitely a good sign to accumulate on the STI index again, given the positive sentiment towards the end of the year or the last quarter of the year. So STI index likely to face some resistance. One is retest the 4,400 level. First support 4282 with the 4,200 coming in very strong at the closer to the 50 days moving average. Okay, that is the roundup for the STI index. For the Dow Jones Index, I think this is the first positive week in 3. So we have that very strong gain last Thursday, up about 1.36%, but we saw a bit of a pullback on Friday. The new all-time high on the Dow Jones Index now stand at 46,137. So we have not seen this 46,000 level before. There's no upside limit for us to guide us or where it can go from here. But looking at the indicator-wise, the MACD is still positive. The RSI is still in a very healthy range of around the 60-point region. So the Dow Jones Index will likely stay elevated for some time. But nonetheless, this is not the level that I would prefer to get in at the 45,800 point level. If let's say it reach the 46,000 level again, I think we will see some resistance. Support level will come in at 45,391 points. That is the first level 20 days moving average, with a very strong 50 days moving average coinciding with the low bound of the Bollinger Band around the level of 44,800 or 44,700 level. That would be a more ideal position to get in on the Dow Jones Index. Okay, similar to the formation that we saw in the early part of August. Okay. So Dow Jones Index near all-time high. You have to be careful, wait for a technical pullback to get back in with a margin of safety. Next, on the S&P 500, which we are seeing having a second consecutive winning week and a new all-time high level at 6,600. Okay, so this is the high level that we are looking at last Friday. First support level 20 days moving average at 6,472 with the 50 days and the low bound of the Bollinger Band closer to the 638 or 636 level. Okay, so for most of the major indices to push up higher, definitely we want at least the FOMC meeting this Wednesday to sort of be in line with market expectation of a 25 basis point cut. If we don't see that, which is highly unlikely, we are unable to get a leg higher. So if let's say we do see that 25 basis point cut, that could be another catalyst to push up the S&P 500, let's say another 100 points higher to test the 6,700 level. So that is where I am foreseeing where the market is moving, preferably to get back in around the 6,005 or lower level, which is closer to the 20 days moving average. Next, let us move to the best performer of last Friday, I would say. Okay, I think for the whole week for the trading week last week, the Nasdaq Composite was the best performer, up 2%. That's what Gerald shared earlier. So you can see that we are also trending on the upper bound of the Bollinger Band at 22,131 points. The all-time high now stands at 22,182 points. So it's at an all-time high now. So definitely not the ideal place to go in long at this moment. 20 days moving average stand at 21,600 with the low bound of the Bollinger Band at 21,070 points, with the 50 days moving average at 21,200 points. Okay, so anything below 21,500, I think would be a safe position to get in. We can still see that if a interest rate cuts were to materialize this week, definitely it will be a catalyst for the high leverage, especially the tech stock that we are seeing right now. So that could really bring the Nasdaq Composite Index with a potential to go 23,000, I think, towards nearer the end of this year. Okay, so if let's say it's pulled back towards the 50 days moving average at 21,200, that is definitely a buy for me. But then looking at the indicator now, MACD is showing slight confirmation across over last week, and that could mean that this could be a new uptrend for the Nasdaq Composite Index with the RSI at 68, but we can see that in the July period, the Nasdaq, once it goes on a run, right, it usually can stay above there for quite a period of time. Okay, so a pullback towards the 20 days moving average, 21,600 or 21,500 would be a good opportunity to get in for a short-term trades towards the upper bound of the Bollinger Band at 22,182 or 22,200 points level. That will be the near-term target that we are looking at for the Nasdaq Composite Index. Okay. So that is all that I have to share on this week index roundup. Any other key things that we need to take note
I
of,
think this
Gerald?
week is really about the US Federal Reserve meeting. Given the very high expectations about the rate cuts, I think investors will be focused on not just whether the rate cuts come true, but also then what happens in terms of the interest rate trajectory going forward.
Yes, definitely the attention not only on the rate cut itself, also on the economic projections of what the Fed is seeing, and of course the press conference after that will shed a lot of light on what the US Fed is seeing for the economic developments in the US, which will be likely more important and sway the market. So that is all the time that we have for this week. Thanks, Joel, for joining us again this week. We will see you again next week in the next weekly market review. Goodbye.